Should we buy or sell the Estee Lauder company? First off, read this disclaimer carefully. Then do your good deed of today by liking and subscribing. So luxury and opulence is a theme I have under the other themes. So Estee Lauder, they are in the beauty products business, 16% away from the 52-week low, 30% away from the highs. Here is the company's website, 20% off on the bank holiday exclusive. So yeah, they do have, numerous deals here. But looking at the pricing, I definitively would still categorize them as, luxury level products. So yeah, here's their, marketing, sales material. Yeah, so this is the chart. Been in a pretty good uptrend until we got into late 2021. That's when the party stopped, and we did get a very substantial sell-off. We found support here at the red 200-week moving average, but it's not been a clean rally to the upside again. So there are definitively some bears just out there, and you also have some bulls turning into bears because they just want to exit at a bit of a better price than they had near these lows. Looking at the daily data points, we do have something that looks a bit rounding bottom-ish here. You also have this green 50-day moving average helping us form a low, so let me just also draw that in. So green 50-day buyable, but there's always a but. You see here that the bears are also able to turn that one into their trading signal. But we are currently at that moving average now, and we stopped almost dead on that average. So it's interesting. Not a screaming buy, but at least it's a sign that we do still have some bulls protecting lows. Now looking at these other indicators, it's a bit noisy here on the weeklies. When we go here to the daily data points, so when we compare, price here with accumulation distribution, we do see that there are definitively people building positions here. So that is, so even though the price action has been a bit noisy, it is bullish to see that overall we do have positions being built. So we are at 50 daily moving average support. We also have a rounding bottom, but I will only give the bulls a 3 here on the technicals because we are at support, but it's I only become suspiciously optimistic at this point. The bulls are showing some weakness, some strength. Only really warrants a 3. So to the right here, we do have the seasonality over the last 5 years in green, 7 years in blue, and 10 years in red. And especially from the 1st of September leading into frankly the end of December, it usually is a bullish seasonality for Estee Lauder. To the left here, over the last 5 years, we do see that September, it is much weaker than August. October is also pretty weak, but the average loss here for October is only 0.5%. Over the last 10 years, the seasonality does get weaker into October. November and December are super strong, but on average, as you can see here, we usually see gains. And over the last 20 years, from September, which is a bit of a lukewarm point leading into December, the seasonality just gets stronger for Estee Lauder. So I will give Estee Lauder here a 6 on seasonality. Given that big picture, we do see that seasonality just gets stronger and stronger for the coming months. That is beneficial for the bulls, rather intimidating to the bears. Here is Saks, number 3 hold, D value score, but we have A growth and C momentum. Industry rank is in the bottom 47%, industry cosmetics. Dividend is 0.92%. Market cap 94-ish billion US dollars. Looking at insider activity. So for August, we had, selling, but we had a bit of accumulation, but not really an inspiring action from the insiders. If we go here to market screener and get, the consensus estimates, and then we find that 26 analysts are covering the stock. There's an 18-ish% upside. Highest is 45% to the upside, but we do actually have a minus 12.6% potential downside, based on analyst projections. I think I will give the fundamentals a 2 here. It's a bit more bullish than bearish, but it's not really that inspiring for the bulls either. So it doesn't make the bulls put on like big trades when you have these kinds of helter-skelter fundamentals. Here is relative performance, a 95% positive with the S&P 500, 96% here with the XRT, the retail ETF, and then you have a minus 34% here with the dollar index. Looking at the daily data points, 78% here with S&P 500, 80% with the retail ETF, but 92% with the LuxE, which is the luxury goods ETF, and minus 71% here with the dollar index. So what happens with the LuxE ETF, LuxE, is going to have a substantial impact on Estee Lauder. So here is the chart. Let's go to the daily data points because this blue 100-day moving average is definitively very, very important. Magnificent short level back here, but currently the bulls are, well, they should try to make this a support level. So very critical test on Friday. Very much to be determined. So this is going to be a very important week for this ETF and also for Estee Lauder. Looking here to the right, just a bit of a messy signals on these overbought, oversold indicators. So the key thing is basically this moving average. So here is Estee Lauder against the luxury ETF. You could make some case that this potentially could become an inverse head and shoulders pattern. That is bullish. If we go here and look at the seasonality for these two, then we don't get anything because the luxury ETF, it simply doesn't have enough data to do that calculation. I give a 4 on relative performance. We had a super important moving average in play for the luxury ETF. The bulls seem to be able to protect it, but we need to see them build confidence the coming week, because it's not simply about protecting a low. That is, of course, a good initial step, but from that you have to show that you were serious. So you need to see higher highs and higher lows, because that is what makes the bears start to close out their positions. And when they close out their positions, they need to buy back the stock, and that adds buying pressure, so it can quickly become self-reinforcing. But overall, we do end up with a 3.8 here in favor of the bulls, but that bullish score is completely contingent on 50 daily moving average support holding. So we have some time left, so let's look at some of the other components in the luxury goods ETF. So one of them is LVMH, which is Louis Vuitton. Yeah, so let's look at the Paris listed stock. So here are weekly data points. Yes, it's just rather noisy here on the weeklies. On the dailies, we are seeing this pinkish 10-day moving average becoming a resistance level, and that's it's not a good sign to see those very much shorter term moving averages becoming an issue for the bulls. Let's look at El L'Oreal like that. So it's OREP. In this case, let's look at the dailies. Yeah, the red 200-day moving average is critical. You see that the bulls, they did valiantly try to tested. They tested, but the bears came back to short and short. And on Friday, the bears just did a lot of damage, major engulfing candlestick. So this is not good. The potential upside is that we do have an inverse head and shoulders pattern that could form. It's especially critical for the bulls to use this blue 100 week moving average as a support level, because if they start to form that right shoulder around, well, with that moving average as the bottom, then you could get an inverse head and shoulders pattern, and that would scare the bears. But currently, the bears are the ones that made it the biggest power move recently, and that was this major engulfing candlestick on Friday. Very much a major shot across the bow. Let's look at Hermes, the Paris-listed stock. So quite a few of these luxury goods stocks they have their primary listing in Paris. So Hermes has been on a very substantial rally. We are seeing some cool down. So let's look a bit at the context. So we didn't really get into big trouble territory on the weekly RSI, but on the dailies, you do see that the current sell-off here, it happened on a similar level to what we got back here. Yeah, and in that case, this very high RSI level, it led to a very substantial sell-off. So let's measure how big that sell-off was, because it looks rather big. Yeah, that was minus 37%. Interestingly, Nike is a part of the luxury goods ETF. I'm not sure I would call Nike a luxury brand, but yeah, it's part of the ETF. Yeah, so in this case, the red 200 week moving average, it's historically been important. Now we are very clearly below it. So we are at a very dangerous horizontal level. So let me just draw that in right here. This is dangerous. If we close below, especially the lowest back here, where the arrow points, that would be pretty bad. Let's look at the daily data points. So it seems like the bulls, yeah, they really were fighting this blue 100-day moving average. Then the bears came back to short, and now the bears are reclaiming moving averages that the bulls gained. One of them here being this purple 20-day moving average. You see that the 20-day was support here and support here and support here. So in that case, you see that, okay, so now the chart shifted a bit. Okay, but you see, it was a bear level, then it became a bull level, but now the bears are trying to just get it back. So yeah, basically you got a major turf war here. And this battle is also coming at a relatively low level. I mean, we are far away from the highs here of 2021. So it goes to show you that even though the bears have made a lot of progress, they are looking for more. So this is a dangerous, because Nike is a very big mega cap stock. So if Nike goes down, it will drag a lot of the indexes with it. So big deal. Here is Ferrari, definitively in the luxury category. Yeah. Blue 100 week moving average turning into clear resistance. Here we have the daily data points. Yeah, bears made a big move on Friday, smashing just through the blue 100-day moving average and also the green 50-day. So their price is below all moving averages. Let's see. Yeah, and we are not oversold yet on the daily or the weekly RSIs. So dangerous setup for Ferrari, at least if you are a bull. This is not constructive developments. You could further argue that we have a head and shoulders pattern. Left shoulder, head, and this is a right shoulder. That is not good. Making matters worse is that we have seen head and shoulders in the past here, very recent past, that definitively played themselves out to the downside. So while we do have a more bullish than bearish setup for Estee Lauder. When we looked under the hood of the luxury ETF, we do see that numerous of the other stocks are in a very precarious situation. It could play out bullishly, but the bears have made some very powerful moves. So the next week is going to be a very big deal, frankly.